Okay, this video is just a bit of a recap about how to calculate tax using Australia's progressive income tax system. There'll also be a bit more information about this in the other video. So basically the first thing you need to do is you need to work out your total amount of income. So if you're earning wages, rent, dividends, interest, fringe benefits, you've got to total the whole thing up to work out what your total income is, or your total gross income. Then what you need to do is you need to apply Australia's tax brackets to that gross income. So you work out what your total gross income is. If your gross income is above 180,000, you've got to use the tax brackets to calculate the amount of tax you would have to pay. So a progressive tax system, everyone in Australia who earns an income must pay income tax. The income tax for workers is called pay-as-you-go income tax, so you pay it every week. And under this system, the employer automatically takes out an amount of money from each employee's pay and gives it to the ATO. So your tax rate depends on the amount of income that you earn. So we have different marginal tax brackets. So in Australia, between 0 and 18,200, the marginal tax bracket is 0%. Then it's 19 cents for those earning between 18,201 and 37,000, and the highest income tax bracket in Australia at the moment is 45 cents on those earning above 180,000. So the marginal tax brackets determine how much tax you're going to pay based on your income. A progressive tax system means that citizens pay a higher rate of tax. You need to say a higher rate of tax per dollar the more they earn. And the tax-free threshold is the amount of money a citizen must earn before they start paying income tax. So in Australia, the tax-free threshold is 18,200, which means you can earn 18,200 before you start paying tax. This is our brackets, and we'll talk about this a little bit later on. So other ways the government make the distribution of income more equitable, they have things like welfare and pensions, public housing for low-income earners, so the government provides public housing for people, Medicare and cards and concession cards, so people get access to low-income earners, get access to cheap public transport, cinemas and a whole range of other things, including health, and public schooling and health also helps to provide benefits for low-income earners. So in terms of calculating income tax, if a person earns $50,000, to work out how much tax they would need to pay, you know they pay nothing on the first 18,200. Then if you go to your calculator, you'll see that up to earning $37,001, you'll pay $3,572. So it'll be $3,572 plus 0.325 times everything above $37,000. So in this case here, you earn $13,000 above $37,000. So it'll be 3,572 plus 0.325 times 13,000, which gives you a figure of 7,797. Then you've got to calculate the Medicare levy, which is 50,000 times 0.02, because you pay a 2%. The Medicare levy would be 1,000, and therefore your disposable income is your 50,000 minus your income taxes for progressive income tax minus the Medicare levy, which is 41,203. Again, if you earn 90,000, you're now in a different tax bracket. So you go back to the calculator. If you earn $80,000, you pay $17,547 in tax. Then you do 37 cents times by anything you earn above 80,000, which in this case is $10,000. So you go back, and it's 17,547 plus 37 cents times 10,000. So it'll be 17,547 plus 3,700. You pay 21,247 in income tax. You'd pay another 1,800 in the Medicare levy because it's 2% of 90,000. Therefore, your disposable income is 66,953. Okay, thanks for listening.